iFAST stock climbed, wait for it, 30% in the last few weeks. This has gotten some people to speculate that it could crash really soon. Really? If you see at the bottom, price earnings ratio right now is 132.95 times, correct? You know, high growth or not, this easily makes iFAST one of the most expensive stock based on this matrix. But is that accurate or not? Today, let's discuss a bit further on iFAST. Hi guys, welcome back. Without further ado, let's look at some of the latest numbers. If you look in terms of annual income statement, you would realize that 2022 for iFAST seemed like a bad year, correct? In terms of profits, it's even lower than in 2019. So it's like some regression. The reason as to why, if you look firstly, China, the operations over there are still losing money. I've been tracking iFAST for a long time and this doesn't seem to have any signs of turnaround. I guess the competitive landscape in China is very, very difficult. And not just that, right now, they have another loss-making operational arm, which is actually the UK banking operations. So these two now become anchors to profitability. But also, these two could potentially be a big growth driver in future. That is why I guess management is still keeping an eye on them. So if 2019 share price for iFAST is $1, then would iFAST share price drop back from $7 now back all the way down to $1? Let me give you the answer. That is likely inaccurate. To understand what's going on with iFAST, we have to look closer at latest quarterly numbers. I'll show you that in a while, but it's quite obvious iFAST skyrocketed from 2020 to 2022, correct? The main reason for that is because they have won a major contract in Hong Kong for the next 7 years, and it's called the eMPF platform tender. This win itself propelled iFAST from $3 all the way to $6. And what Mr. Market is clearly saying is, this is a game changer. Huge growth phase coming up. That's actually something I knew, but I hate to admit it, I think I've underestimated the potential of this market. I've seen too many examples of markets getting too optimistic because all the revenue and profits were mainly going to come in from 2025 onwards only. But let's look at latest quarterly numbers, correct? Something I mentioned just now. If you see over here, you would get a taste of what is to come. Third quarter 2023, which is September 2023, you would see that the yellow bar, net income, has shot up. This is a massive, massive jump. A 308.44% year-on-year increment. And to put it in exact numbers, this 8.5 million net income already matches what iFAST achieved for the entire year of 2018. If we break down into geographical segments profits, some of the key drivers, firstly, is from the Singapore market, which climbed 65% year-on-year. Singapore market currently is still iFAST's stronghold. This is where iFAST built up its bread and butter. The asset under management for iFAST comes a lot from Singapore, and what you can see is right now is at a record high. Of course, the market sentiment plays a part in this, and when markets are good, typically people buy stocks, buy funds, and there's sales charges. So iFAST earns through sales charges as well as recurring fees. And from my understanding of business, some of iFAST's costs like staff costs is pretty much fixed. When markets are bad and volumes are low, typically the profit shrinks very quickly because there's fixed costs over there, correct? But when markets are good and there's a lot of trading volume and there's a lot of purchases, you would realize the cost doesn't climb that much, but the profits will shoot up. So it's a very highly cyclical business that breaks down into two segments. The first, in red color on top, the B2C segment, which is actually Fund Supermart or FSM1. The blue color shaded region below is actually the B2B segment, which is where advisors like me partner with iFAST. That's why I'm very familiar with their business model. So when I place a lot of business, iFAST also grows in terms of the AUM. But let's put up the profit and loss geographical segment. Did you realize something? There's something below Singapore that we talked about just now that saw an even bigger increment. That is none other than Hong Kong with a 218.7% year-on-year change. And I'd like to give you the exact reason as to why. Profits are starting to come in already from eMPF. Previously when I read the updates, I focused a bit too much on the whole onboarding process for this EMPF, whereby in my understanding, they're building some tech infrastructure over there. I didn't realize that profitability would be starting from second half of 2023. Somehow I missed out on understanding that single month's contribution right now in this early phase has really rewarded the Hong Kong segment with such huge profit jumps. Therefore, it's important to understand and think a bit deeper on this EMPF project. Let me pull out again the guidance Hong Kong targets. You would see that quite possibly in a couple of years' time, the gross revenue would 4x. The net revenue would in fact be 5xing. And that in itself would drive up the profit before tax, the PBT, to be almost 5x as compared to right now. Wow. So if we were to understand this correctly, quite literally the Hong Kong segment would become even bigger than Singapore by quite possibly 3 times itself. So that's something to learn, and hopefully that gives you new perspective of understanding the growth of iFAST. And if you have benefited, smash the like button. It's taken our team hours to prepare this presentation for you, and I'm filming this late night because I'm having a hectic week. But yeah, it's also something that I always wanted to share to show you a bit deeper on one of Singapore's best growth stocks. Now with the growth potential, the nice part mentioned, let's give a balancing point of view to talk on new developments as well as the risk of iFAST business. Before we get there, again, not investment advice. And if you like to trade on iFAST stock, check out on Moomoo platform right now. Right now, they have actually a starter kit that is worth more than $600. I'll explain it in a quick while. Let me do a quick demonstration for you to see why I actually rate Moomoo's platform so highly. What you can simply do is to actually see the price chart in the platform itself, and not just that, you can even look for news as well as comments, toggle around and you can actually see the company portion whereby it shows you full analysis. So one stock place if you are looking to do stock investing, to quickly learn about a company that you are looking to invest into. The trading interface is very simple to use, and everything can be done on your handphone. Right now, Moomoo's offering you $0 in commissions free for 1 year, which makes it one of the cheapest platforms to trade Singapore stocks. If you're looking for US stocks, it's $0 commission forever. If you have spare cash that you're looking to park for extra returns, check out Moomoo Cash Plus. Right now, it's 5.8% guaranteed for the first 30 days, and you can actually park up to $80,000. So again, recommending you to sign up for Moomoo's trading platform. You'll not only get the Moomoo Cash Plus, you also get fractional shares of the most popular traded US listed companies. In total, this welcome bundle is $680. So again, if you're looking to sign up, look for the links below. And with that, I'll say a big thank you and dive back onto the case of iFAST. Let me pull up 2 analyst reports to go through some potential risks that they have flagged up. The first by CIMB. They have mentioned also that this ramp up of e-pension may be uneven due to timing of onboarding. In my interpretation, this suggests that there could be hiccups or delays, so don't discount that potential risk. They've also mentioned that underlying business growth was mild, and for growth stocks, typically that is not too good a news. What about UOB Kay Hian? They have looked at earnings forecasts with these new results, and have actually trimmed their forecast of iFAST's profits by 13.8%. Mentioned further, they have a new target price of $6.56 based on the 23 times forward earnings for 2025. If I were to read this correctly, that means that they project 2025's profits for iFAST to be around $84 million. And if I compare this to iFAST's own projections, this seems very conservative. If Hong Kong itself is $84 million already, then with the rest of Singapore, Malaysia and other core businesses, I think $110 million in profits is very possible, which will equate to 18 times forward earnings for 2025. That is way better than 132 times price earnings ratio right now. But still, it's a price that personally I wouldn't want to pay. I'm still waiting on the sidelines for a better entry price. While I mentioned that, it's also worth to note that if the Hong Kong profits for 2025 is way bigger than 84 million even, then yes, what I mentioned today would likely be too conservative, and buying today at iFAST would have become a miss. From what I read and from my interactions with CEO Mr. Lim, I came to realize that iFAST looks at Charles Schwab's business model as a long-term target to grow towards, which is good, which is ambitious. And if you were to look at Charles Schwab's current price, we would see that its price earnings ratio is 18 times right now. And that's today's price earnings ratio instead of 2025, where there could be also some operational risk to get there. So again, that's food for thought for you to consider before you make any purchase. And again, not investment advice. Let's round things up with some key developments that I think you need to take note that could really sway the projections for iFAST towards more positively or towards more negatively. The first is that the global bank is right now in initial build-up phase, and deposits have actually been climbing very well. Right now it's at $232 million already, from a previous of 96 million just a year ago. I understand also that Singapore is not the immediate target. Banking space is very competitive here, there's digital banking. But in China, there's actually some viral videos that gone about teaching people about iFAST's global bank for citizens to park some monies in. Therefore, the take-up rate overseas is way faster than in Singapore. iFAST has also mentioned that Singapore IGM division will be doing some product financing. They've actually gotten licensing and they've actually done up that infrastructure. And through some discussions with them, they've also pitched things to me that are here. And loans are always nice for a banking business to have. It makes the customers a lot more sticky. Fixed income business, which is actually bonds, have also shown tremendous growth over the last few quarters. This could be a future growth area. If equities stagnate, iFAST actually has some foothold in trading and managing fixed income assets. All in all, a growth stock like iFAST has risks in terms of hitting their operational targets, but they've also had a very fantastic track record of innovation that is very hard to bet against. I'm still waiting on sidelines on what I mentioned. CEO Mr. Lim has actually bought in at $4 plus. Keep that in mind. If iFAST share price corrects, it could be a further opportunity to invest. And if iFAST does a dual listing, for example in Hong Kong, where most of its future revenue is, I think that could be a real future kicker. Let me know in the comment sections whether you agree or not. Thank you for watching right at the very end. Let me introduce you to some of the top dividend stocks in Singapore. iFAST actually pays dividends and they are in this list itself. Check this list of top 10 dividend companies. I'll see you there and hopefully that can help you in your investment journey further. Take care as always, invest safely, goodbye.